Hey everybody, CJ over at Empower Lending. I hope you are doing great, having a great day. There's a lot of news out there, right? And interest rates have been headed in the right direction finally. So just wanted to do a quick breakdown of what we're seeing, what we expect. Obviously, there's some instability going on with the banking industry, which I have made a separate video on. So if you do have any questions on the SVB, banks, the Fed, how that situation is going to affect housing, or just a general breakdown of it, feel free to click that link. That'll be included in here as well. But let's get to the market. What we see here, this is the mortgage-backed securities market. With what we're looking at here. Remember, on this graph, anything down is going to mean rates are decreasing. Anything that is going up means rates are decreasing. So we can see here this trend that started back in early February, right? Got some bad job data, got some bad inflation data, and we were just on this downward trend, right? This whole time we're looking for a bottom, and looks like finally that bottom came. And so some of this is going to be from the instability in the market, right? So anytime there is some major shakeups, whether it's SVB or anything else, bonds are considered a safer asset, and so we'll see clients or people in the stock market move their money from the stock market, which is considered more volatile, to the bond market. Anytime there's more money in the bond market, that means rates lower, right? And vice versa is also true. Anytime you see, a really, really good time to invest, stock market doing really, really well, a lot of times people will be taking money from the bond market, putting it into the stock market, and so you'll see the vice versa also be true. So all this instability has created, finally, we've started to see interest rates, get creep back to some decent levels. You see, still haven't completely recovered from where we were up here in very early February 1st, February 2nd, but we've clipped a good amount, and so again, a lot of this is from the instability. There also was some CPI, which is a measure of inflation that came out at expected levels. So CPI inflation is decreasing a little bit. So we are starting to head in the right direction here. All the way at the bottom of this probably would have been low sevens, right? Now we are in that upper 6 to mid 6 range with interest rates. Do see some really positive indicators when it comes to interest rates and what they're going to do here in the next 6, 8 to 12 months. May 10th is an important day to keep in mind. It looks like a lot of the technical data looks like we may get some good movement on May 10th. Obviously, no guarantees, but I do think we are going to start heading in the right direction, and rates will be lower in Q3 and Q4. Again, I'm hammering this home. I feel like I'm a broken record, right? But if you have clients, or if you are a client who is waiting on rates to drop, direct correlation between interest rates dropping and home prices rising, right? The lower rates are, the more likely that someone is going to want to purchase a house, right? And just simple supply and demand from there. If there are more people in the market looking to buy a house, those house prices are going to continually be driven up. So the smart way to do this, and where you can really game the system, right, is to take advantage of these next few months of uncertainty and instability in the market when rates are maybe a little bit higher, right? Get that value at a level that in 5-10 years from now is going to look, crazy low, right? And then we can time a refinance. We can do a no-cost refinance, right? Where you're able to lower your interest rate, lower your payment, but you're still locked in at that value, which is always the most important thing. So again, rates kind of in that mid to upper 6, could get to the low 6s depending on how we structure things, and we do think they will start headed in the right direction, but if you wait for rates to lower, might be waiting too late, and you might have to pay a whole lot more than you would now. So if you have any questions, you know where to reach me. Thanks.